Hey, welcome to the Insurance Buzz. This is your host, Michael Weaver, and I am freaking pumped about today's episode. We have Mr. Steve Valentine with us today. Steve, how are you, my man?
What up, brother?
Man,
It's good to be here.
I'm so freaking excited about today. So, as y'all know, usually it's insurance professionals coming on, industry experts. Well, I got an industry expert, but this is real estate expert. And I wanted to bring Steve on today because he has a really unique story. I think it will relate really well to you. And also, we're going to be talking about what Steve looks for when developing partnerships with insurance professionals later on in the episode too. So first of all, Steve, man, tell people a little bit about yourself.
Oh, well, this is AA meeting. No, sorry, wrong. You know what? I've been married for 23 years. I got 2 teenage boys. I have a lot of fun with my kids. And I've been in real estate for 23 years. I got my license when I was 20, and we've bought and sold a lot of real estate. We've had a lot of transitions in our business, and we've been through the crap. As far as losing everything, rebuilding it, and pivoting. One of my big things that I teach my real estate agents is like, don't be afraid to pivot. I think in the insurance business, same thing. I mean, you're selling the same product, right? But how do you pivot in different markets, and what do people need? And now, where I've grown and gone to is that I teach people like Mike and Courtney and people in my mastermind how to invest in real estate and how to take their earned income and turn it into assets. And that's the big thing for me. The reason being is that my dad died at 63 from terminal cancer 7 years ago. And, he was in real estate for 40 years and owned nothing. And so it was a big thing for me to kind of pivot in that aspect. And, we really experimented on ourselves. We learned all the crazy things to do. And then I get to coach people in the investment space on real estate, like Mike and Courtney, where there's different things, different ways to do things. One of the big things, Mike, is that, as insurance agents, those types of things, we talk to these people about investing, but who's really guiding them through the investing process? And are they really insured for the things that they need?
Absolutely, my man. No, and I love that. And so, and you said a couple things there. Like, I definitely think in business you have to pivot. And obviously, I can't wait to have a conversation around a little bit about what you find business owners doing to help really maximize their money outside of maybe their normal business, because I know you help quite a few folks with that. But before we get into that, number one, I'm freaking stoked to have you at the Weaver Sales Academy members event in October, man. I'm freaking pumped.
Dude, I'm freaking jazzed about that. I cannot wait.
Oh, dude, it's going to be, I'm so excited for the members because they don't know you on the level like I know you. And obviously we can only talk about so much on a pod, but let's talk a little bit about your experience because you were in it in the shit in the 07 to 09 time period when real estate literally tanked. And so talk to us about what you experienced in that, and then how you did pivot to overcome that, because you've built over a $50 million portfolio since then. And so I really would love to hear that story.
So so you go through it, right? I was a young real estate agent. I got my license when I was 20, got married at 22, had a couple of kids. Market's great, everything's going well, and one of the big things that I didn't do, and I'm hoping that, like, on this podcast, like, anybody that's made a bunch of money over the last couple of years because things have been good, that they've started putting things away, right? And that was the big downfall that we had, is that we were just pushing money in different things, but there wasn't this reserve set up that was, if shit hits the fan, I can take care of my family, and for us at, 27, 28 years old, I had 2 boys, lost our house to foreclosure, really wanted to commit suicide at the time, because look, we were underwater, like $1 million of debt underwater. Like, that's how bad it was. So you think about 27 years old and going, I have $1 million in debt, I have 2 kids, a wife, and I just lost my house. and real estate's in the tank. So how am I supposed to make money? Right? That was the hard thing. But I'll tell you what, I had a very good friend and investor of mine that I was spending some time with in Vegas when everything was bleak. And I was explaining to him the same thing that I just said. And he walked behind me and he smacked me as hard as he could in the back of the head. And he says, I don't know too many 27-year-olds that ever made $1 million to lose. You just have to do it different next time. Those words have rang true in everything in my life, is that, like, look, you figured out how to do it one time. How do we do it different? And how do you learn from this and change, right? To make sure it doesn't happen again. So, you take those words and you fast forward to where we're at now. 2008, we were broke. We were literally hiding our cars 1 month at a time in the garage to make sure they weren't repossessed. And
for those, not to cut you off, Steve, but for people that don't know, Steve is from Arizona. He was in Phoenix, where I believe hit some of the hardest in the country, quite frankly. So just to put a little
recover.
Yep. So just to put a little perspective on really what, not only did he hit really bottom, but he was also bottom in probably the worst real estate possibly city in the United States.
But also the best place to be when it came time for the turn, right? So we talk about, one of the things that's really important for your audience to see is that one of the things that brought us out of that situation was the relationships that I had created when I first got into the business. Okay. So when you're doing insurance, you might see as an insurance, whatever you're writing and, it's homeowners insurance, but the relationship capital that you have may be the ticket out of any crazy market or the one referral or whatever it is. So what I mean by that is that the relationship I had in the industry with my real estate broker in 2000 when I got into the business was the same broker that called me in 2008 and said, hey, I have an opportunity for you. I would love for you to work with me. I think this would be really good, right? And so that was the one phone call that I got that changed everything from 2008 to 2012, 2013. It was the one opportunity that I had that I made millions of dollars from because she put me in front of Fannie Mae and Freddie Mac, which were the banks that were holding all the foreclosures. And it was work, right? We went and did the work, but it was the one thing that allowed us to go head down and pay off that $1 million worth of debt that we had. We never filed bankruptcy, and that was a character thing, right? Because some of the people that we had borrowed personal money from, I couldn't bankrupt them, right? I couldn't bankrupt the debt because I needed to pay them back. So we went through that 4 years and literally 20 hours a day working foreclosures because it was so busy. But 4 years later, from foreclosure to buying the house that we still live in, it was a crazy road. But I had a spreadsheet that was 3 pages long with debt. Who do I owe? How do I pay this off? How do I settle it? I spent half my time, my working time, just trying to settle this $1 million worth of debt that we had. But one of the things that some people might be struggling with right now is, we might be over leveraged. And the one things I would encourage people is if you're over leveraged or you're struggling with things, make sure you're taking 5 to 10% of whatever you're making and just put it away somewhere. I don't care if it's under your mattress or whatnot, but that's what I learned in those days. And I wished I had done it beforehand so that I had something to take care of my family. It's kind of like the old Dave Ramsey thing, right? Who's below the line? We had some $200,000 debts that I pushed off for years, $25 a month. I'm like, look, this is all I can afford. This is what it looks like. But I made sure that we were putting reserves away. So, that is one thing, no matter how long you've been in the insurance business, make sure you're putting a percentage away that is rainy day fund. And we all hear it. Mm-hmm. And Mike, I think, we've seen it in the entrepreneur space where, the more money you make, the more you spend.
Yep.
Rather than, which is my big thing when I'm teaching, my wealth strategies is, look, you can spend all that money once you have the assets set up and things are kicking, and then you can go spend some money. But you got to be patient with it.
Yep. No, I love that, man. And I think the one cool thing about, or really unique thing, is insurance is fairly recession proof, but you got to have your, like, I'm a firm believer in that too, man. Like, you got to have your cash reserves. Like, the more money I make, the more I'm like, all right, like, instead of having this amount in reserves all the time, I need to bump it up just a little bit more to have this reserves. And so when I make more money, I move up my reserves. It's like, and so I love that tip. And I think that, I don't know, man, I can't even believe, I can't imagine. I think that what you just said, though, it says a lot about you, because I think a lot of people, you could have just walked away. You could have said, hey, like, I'm not, yeah, you loaned me the money, you knew the risk, too bad. I have a follow-up question to that, though, because your investors that you paid back, obviously you're a big relationship guy. That had to have meant a lot from them. And so I would imagine they probably, did they still continue to invest with you and do business and work with you since you did hold your integrity, you held your word and paid them back?
Yep, absolutely.
I freaking love that, man. That is
your word's your bond at the end of the day, right? And we've all heard like the horror stories, the Ponzi schemes, and the people that have done that. But I'm too invested in people to walk away from somebody when it comes down to it. In fact, I'll give you like a little story that's kind of crazy. Is that we had a client. So picture this, right? I'm 25 years old when this happens. I know nothing about like the debt, P&Ls. Like, I'm just selling real estate. And so one lady we sold a house to, or house for, she was moving to Iowa. She was getting like $200,000 out of her house. And this was back in 2005 when the market was still really good. And, my dad had set up all these construction companies, and I didn't understand business or P&Ls or cash flow or anything. I was 25, right? I wish TikTok was around back then to teach me some more stuff. And so we borrowed 120 grand from this sweet old lady, because that's what she was. And I found out 18 months later, like, I was the sales pitch. And then I found out that my family never paid any interest payments to this lady. When she called, I was freaking devastated that like I had done this. So I said, hey, look, I can't afford it, whatever it is. I started sending her a little bit of money. And the communication thing is the key. And, probably 6 months into that story, I was paying her like $100 a month because that was all I could afford. And she called. She says, hey, you know what? She said, when the stock market crashed, I probably would have lost most of that 120 grand in 2008. And I still pay her to this day. Because my agreement with her, she says, I'm going to forgive half the money you owe me because you've made the effort. And my agreement with her was, I'm going to pay you $1,000 a month until you pass away. And I'm not keeping track of this note.
I love that.
So I just pay her. I have coffee with her every now and again. She's 85 years old. That's just what I believe in, right? It comes down to the character and integrity of who you are. And I always love that. Like, I could have bankrupted her. I could have left her high and dry, but there was no way I could as a person.
Man, I freaking dig that. And you know us obviously on a more personal level, but I'm a firm believer that your word is your everything. What you put into this world, you get right back out of it. And absolutely, man, and that's why, like, Weaver Sales Academy, like, my last name is freaking everything. Like, if I say I'm going to do something, I freaking show up and do it. And I know you're the same way. And man, I love that. So I got to ask this, Steve, like, this wasn't necessarily something on my mind, but I'm sure. So there's a lot of insurance professionals that they use real estate as a tool outside of their business to make money. Okay. So I want to dive into that just a little bit around maybe some things they can do to even make their money work for them a little bit more. But before we get into that, what's your opinion on the current state of the real estate market right now? And I know that you have, look, your guess is as good as anybody else's, but you are in the trenches. You're seeing it. I'd love to know just your take on what's on right now.
All right, so you want me to get my crystal ball out?
Hey, this is when it's like when people ask financial advisors, like, so what's the market going to do, man? Like, is it going up? Is it go-? If I knew, I wouldn't be sitting in this seat because I'd be a billionaire, man. I'm with you. I don't know.
Let me get the dartboard out. We'll peg some stuff on it. So here's the deal. So they talk about real estate cycling in the economy like every 10 years. So like, let's walk through this real quick. In 2000 was when the dot-com thing happened, and shit hit the fan because I bought my first house then, and I think I had a 7.75% interest rate in 1999.
So you're aging yourself a little bit, Steve.
Yeah, well, I'm only 44. I'm like, there's no age there, right? So here's the thing. So 2000 shit hit the fan.
Yep.
Rates went up or they went down, and then the market was crazy in 05, 06, and 2008 happened, right? But 2008 was a very fictitious bubble. And if you haven't, like, here's 2 shows you have to watch, and you have to watch them in order. You have to watch The Inside Job, which is a documentary about 2008 and what, the subprime lenders and all the things. So you get all the little dialogue in there, and then you go and watch the Hollywood version of The Big Short.
Yep. Okay.
If you watch those 2 things, you realize that the market that we're in right now is very different from then. Back then in 2008, everything was fictitious. Your dog could get a loan for $1 million house with no job, no income. And on the inside, and on The Big Short, they're like watching strippers that have 10 houses that don't claim any income, all the things, right? That market was very inflated fictitiously because of what was happening on Wall Street.
Okay.
Right? So now all that happens, everything collapses, which was a global collapse. It wasn't like what we're experiencing now, right? That was a global collapse. So now we start to recover. And that recovery, everybody thought was going to stop in 2020, 12 years, right? Which is a longer cycle than 10. And we actually ended up going to 14 because of COVID. COVID was a blip in the radar where everybody made a bunch of money, similar to 05, 07. I still believe the Fed they've raised rates too high too fast. They're like, hey, let's put some jumper cables in the pool.
Yeah.
So now we have this shock factor, and what happens mindset-wise? Are you just picturing the pool?
Jumper cables in the pool, baby. I couldn't help but giggle.
Let's just shock the economy, right?
Yep.
So here's the mindset difference in 2008 is I was broke. I had lost everything. So the mindset was survival. Now mindset, which I'm trying to help people understand, is we're in an opportunity zone. There's a lot of desperation out there. There's a lot of things happening. Do I think the real estate market is going to crash? No. Unless, we don't have these controlled environments from who's controlling the interest rates and things like that. But I don't believe, depending on the market that you're in, that it's going to crash again. It's going to come down a little bit. Don't get me wrong.
Yep.
But the interesting part, Mike, is that if you look back at it, look, if I take your investment property that you bought from me, what did you guys end up interest rate wise when you bought?
We were mid 4s.
Okay. Mid 4s. So the same property, even though you might be able to buy it a little bit less right now, let's just say you could buy it for 10% less right now, but your interest rate was 3% higher.
Yep.
Doesn't make a lot of sense, right? It's not going to cash flow. It's not going to do the things, all the stuff, right? So now we're in opportunity zone. And I think that, from an insurance perspective, you're going to have some investors come out of the woodworks. You're going to have people look at what is opportunity. Even though interest rates are higher, what kind of deal can I buy in the current market based on somebody's scarcity?
Yep.
And that's what's happening right now.
I love that. Okay. That's good, man. I think everyone's just like, what is going on? Like, who knows? Like, is the Fed going to pump more money in? Are they going to continue to raise rates? Like, I just looked at a statistic that over the last 3 months, historically, we have the lowest drop in U.S. job openings across America, except for during, obviously, the pandemic. So what does, I think everyone's kind of uncertain, but I had to ask you, well, I've got a professional on the call. Well, I've got somebody that's in the trenches. I got to ask kind of what you see going on in the field.
Well, just like insurance, right? So just like insurance, it's recession proof, right?
Mm-hmm.
People need it.
Yep.
They should have more of it than they think they do. People still have to have a place to live.
Yep.
Right? So when you look at certain things like right now, even like the investment property that you bought or all the stuff that I own, it's recession proof right now because right now it's cheaper to rent than it is to buy.
Mm-hmm.
Take the same house that you own. This is the insane thing, right? The same house you own, if somebody bought that with 20% down right now, it would cost them $3,500 a month in a mortgage payment. But you can rent it for $2,500. So why would you buy it? So as an investor, you're going to capitalize on that particular market. Now, as a buyer, you might be a little negative, but can you get a discount on a property right now that makes up for that negative cash flow for a while?
Yep.
And that's really what I'm coaching people through right now is like, look, everybody back in 2008 was scared shitless. Mm-hmm. Can I swear on this?
Oh,
did I just?
Oh hell yeah, man!
You'll bleep me out. You'll bleep me out later. So here's the mindset right now. Look, if I've got some money or I have the ability to hold on to it, I want to look for opportunities in the current market.
Yep. Because
it's going to happen, right? And I didn't do it in 2008. If I had, I mean, I know that you were drinking and chasing Courtney when I was going through 08, but like, here's the crazy thing. Like, can you imagine the houses that I sold for Fannie and Freddie were, you could buy a house in one of our lower income areas, $19,000, $17,000, $18,000 for a house. I mean, granted, it didn't have any plumbing or anything in it because it had been ripped out, but you could have bought a house on a credit card and put a fence around it and you would have made a shit ton of money.
So you don't think we're going to go back to anything like that, though?
No.
Cool.
No, not even close.
I don't.
That takes a long downturn to do that.
I don't think so either, man. Like,
No.
So, all right, enough with the current state. But I do think so. I do have one other question. Like, so because you are big into obviously how you get loans from private investors, from either business owners, investors looking to make their money work for them that may not want to own the real estate and things like that. So how do you go about establishing relationships like that? And then after that, we're going to get to the how do you develop relationships with insurance professionals? What do you expect? Things like that. But I want to talk just about the investors side of things because as a business owner, as an entrepreneur, no matter how much money I make, we've just done well. We've been blessed, but banks still just anytime I go to get a loan, man, they just try to tear me. It feels like they tear me apart. They beat me down. They kick me where you don't want to be kicked. And they're like, well, maybe we'll do this. Maybe we won't. So how would somebody what are some ways that you've went around establishing relationships with private investors? Because insurance professionals talk to people every day with money. Okay. So what does that look like?
So I love that conversation because you guys are in the same thing. So if you're my insurance agent, Mike, and you're talking to me, you're like, oh, you've got great liquidity, this, that, and the other. Now you're having conversations of what kind of rates of return are you getting in the stock market? What kind of rates of return? What's the guarantee? What's the risk, right? We've all had that financial advisor meeting where they're like, so let's do a risk tolerance test. Mm-hmm. And right now, risk tolerance is, people they're shitting their pants. They're like, I don't want to keep my money in the stock market or things are too volatile. So what I've gone through and done is have the question. So if you're, talking to somebody about insurance, but you're also talking about like, hey, what else do you invest in? So you might be able to go down the whole life policy, right? With the banking policy, and hey, this might be a good idea, and here's some ways to couple with it. So, I've got a guy good friend of mine, that started to talk to me about the whole life banking policy, and hey, we can do this, right? But then I took it a step further with him, and I'm like, hey, if I invest in this whole life policy, or you do, what are we going to do to create greater gains? So now you start having kind of that financial advisor, but at least planting some seeds. So that particular person, we've put a ton of money into some whole life infinity banking policies, a lot, like with my kids and everything else. It was a great strategy. But then I helped him take it a step further. So now he's sending me clients where, hey, you can put your money here, and I want to connect you with my real estate agent who's an investor so that you can take that money and put it to work over here. Yep. So, kind of going through that, it's creating relationship. But I think the big point, Mike, is that we have to have better questions and better conversation when it comes down to like, hey, tell me what you're invested in. How much liquidity do you have? Can I, and I think this is an important part, would you mind if I did this is one of the things I use in my business, which I think is great for insurance agents. Would you mind if I put a strategy together for you based on the things you've told me? So now I can show you what insurances I would propose, not from a sales standpoint, but from a strategy standpoint as to why we're doing this, and so that we can get from point A to point B and make sure that all these assets that you have are truly protected, because if they're not, you're going to be a world of hurt. So, my dad was one of these big proponents. So if you guys are listening, like, check this out. My dad was big thing on insurance, right? Make sure, like, I would rather you miss a car payment than your health insurance, right? Like, keep insurance on your car, but miss the payment, you can make it up. If your health insurance gets canceled, you're screwed, right? And I think this is where some people look at things and like, what do I choose to pay this month? Yep. So here was the thing that made me a believer on that. 2008, let's go back and revisit for a second. 2008, we were broke. Health insurance was $1,000 a month for me, my wife, my 2 kids. I broke my neck in 2009, okay? Had I not had health insurance, my situation would have been even worse than it already was. Right? I've got 7 pins in my neck from doing a mad mud run when I broke my neck and was almost paralyzed. But had I not had insurance, that would have added to everything.
Oh, you went bankrupt. I mean.
Oh, yeah. I mean, there probably wouldn't have been a choice at that point. So you take that same thing, and when we think about health insurance is like insuring a home or insuring a home. I need to protect my family. I need to protect my home. I need to protect my car, all the things. And I think people are very lax about it until shit hits the fan. So my dad was always big on like overinsure everything. But I think from your audience is like, how do we have that conversation to make sure that they understand the what ifs?
That's right.
Right? Like I have teenagers. Okay? Having teenagers and putting them in a car is like handing them a loaded gun. Because I was a teenager once and I knew how I drove. So, we started going through with my insurance agent about, hey, your kids are starting to drive. We need to increase your umbrella policy. We need to make sure you're protected, because if something, God forbid, happens, we want to make sure and protect the assets. And that's everything in your side of the world. Is like all we're doing is we're selling protection from catastrophe. Yep. It's expensive, but it's worth it when shit hits the fan. No. And I've been through all the things.
I love that, man, because I and I appreciate you bringing this up, because insurance professionals sometimes can get in the day-to-day, the transactional selling. Meeting with customers isn't a thing anymore. That's old school. Actually, that is the number one way I believe to make yourself different. If you're not unique, you're weak. If you're not different, you will lose. And so if you're not the not the individual that, because insurance professionals have a really unique opportunity to have conversations with customers that no one else is having. And so I love that you bring that up, really, of that holistic strategy. What's your plan? And the diversification process. Just like you said, you're taking the self-banking, which a lot of insurance professionals look at those whole life self-banking concepts as very similar to real estate, to where once it's paid, once the policy's paid, you own it like an asset. The asset continues to grow. You can go in and get money out of the policy just like you can real estate. And you can fund each other. The only difference is, obviously, when something happens, the policy pays out tax-free. Something happens when you own real estate, you just pass the real estate to your however you have it set up. And so I do love that you hit on that stance. So, man, that's good. So let's go into what you look for, because you not only have a huge real estate portfolio, but you work with a lot of real estate professionals, and so I want to see. What are, like, if you had an insurance professional listening to this right now, if you were like, hey, if you're looking to develop a relationship with real estate agents, what are 2 to 3 things they should be doing that benefits? Because I think a lot of times when people go to develop relationships, sometimes they're thinking about what's in it for me, whereas I always try to think of what's in it for the individual I'm building a relationship with. How can I help their business? How can I help their customers? And so I'd love to hear that aspect of you, like when you're building relationships with insurance professionals, what are 2 to 3 things that the individuals have done that stand out that you work with?
So I think one thing from, your side of the business is I have this amazing commercial insurance agent that handles all of our rentals. So we own 80 single family homes plus the things that we flip. So insurance is constantly moving, right? It's not like your typical homeowner's insurance. But he really lines everything out for me. Like, hey, we need to do this. We talk through umbrella policies, like all the things for asset protection, right? So I think the conversation with a real estate agent is like, what value can you add to their audience and keep them moving from that standpoint? So what happened during COVID when property values shot up by like 40% in Phoenix? How many people were underinsured for cost of replacement or didn't have a replacement cost because of material supply? Like, that wasn't happening, right? The insurance agents could have reached out to everybody and said, like, hey, I want to review your policy and make sure that the value is covered, right? So that's a value add. Can I do a Zoom call to your audience? Can we do a Facebook Live and talk about insurance and the things you can be doing, right? The things that people are missing. So what are like you think about, like, what are the top 5 things that people miss on insurance?
Oh, man. So, yep.
Right? Like, that comes from your profession. But nobody's done that for me and said, hey, I think these are the top 5 things that are missing. Let's do this for your audience. Right? So if you have an audience,
love that.
How do you go in and attract that? So a real estate agent, most of the time what happens in my business is insurance is a 11th hour thing. We're like, oh my God, I need homeowner's insurance for my lender. And then they just call some random person and get it. Rather than the real estate agent saying, hey, like, I need you to do a strategy session with my insurance agent to make sure that you're covered and all the things are right. That's the relationship that I would expect from my agent. So, like, I deal in strategies. So if you're in insurance, just change sale to strategy. You're not selling anything. Like, let's give somebody a strategy on their insurance and the plan, and how can I help them? Or how can I help them connect the dots? Right? So I'm a dot connector. You're a dot connector because insurance, you may not always have the availability for insurance, right? So, most of the audience doesn't know this, but I just built this ridiculous 72 Blazer that we put a shit ton of money into, but Allstate couldn't insure it. Part of it is because I have teenagers on my policy, which has been a total pain in the ass. If I would have known that, I might have, like, man, maybe I shouldn't have kids because I can't insure my cars. Right. But Allstate connected me with somebody else who connected me with somebody else until I could finally get the insurance, right? So those are things that are really important in your industry, just like it is mine. If I can't do it for you, who can I connect you with? I may not get anything out of this right now, but I do get the relationship with the client because I help them and they'll be back.
Freaking love that, man.
Right?
I love that. Just because you can't benefit now doesn't mean you still shouldn't be asking the customers or talking to the customers about their situation. Like, I love that. Like, because that's one thing I'm very, very passionate about. Because there's a lot of insurance professionals listening to this right now that they can't help people out with health insurance, but that doesn't mean you shouldn't have a health insurance conversation with them and then be able to guide them in a direction that can help them. Because if you're really taking a holistic approach at somebody's financial plan, health insurance is a big freaking deal. And so you just shouldn't skip that because you can't benefit from it. So I love that you're a dot connector. I freaking love that.
Look, that would be the same thing. If I could sell you an investment property, but I can't lead you to somebody that can manage it, am I really good at what I do? Like, I can sell you something, but I can't guide you through the rest of it, right? So if somebody calls like, hey, I'm looking for health insurance, you're like, well, you know what? I don't do health insurance, but I have this great person that I work with. Let me connect you with them. And by the way, can we set up a strategy session to go through the rest of your insurance on your home, your autos, and let me see if I can save some money to help offset the health insurance.
We're getting buzzed on the buzz today, my man. This is freaking good, brother. Right? No, and you hit on hit on such a great point, because that was one of the reasons. One, we did business with you because of your knowledge, but the process was so dang easy from a customer experience standpoint, and that's really what I would encourage you, the listener, to think about right now is how can I make the customer experience really informative yet really simplistic to where the customer feels empowered, educated, and safe at the end of the conversation. Like, I think that's because that was with the real estate. Like, okay, we bought the house, you flip it. So you didn't flip it, but you remodeled it for us, got us in touch with a management company, got it rented in a totally different state. I'm in Missouri, you're in Arizona, like, and it was hands off. The thing is, like, it was just so simple. And I think anyone can learn from that. Any business owner, any agent listening to that, like, how can you make your customer, because people pay for like the customer experience. Like, if they have a great customer experience with you, they get to know you, like you, trust you, they're never going to go anywhere. Like, we're in the business of trying to establish relationships for the next 20 years, not the next 20 days.
Well, and, you know, unlike my industry, right? I mean, most people, they buy a house every 7 to 10 years, or maybe they do some investment strategies, things like that. But in your business, things are changing so often. You know, cost of housing, auto insurance, all the things, right? If you're setting up a strategy session, I'll tell you one thing that my Allstate agent is missing. I only hear from her when I call her. But yet I have a net worth of more than 50 mil right now. She's not looking like, hey, we need to adjust this stuff. Unlike my CPA, where she's constantly adjusting and we're having meetings. She doesn't know what I've done other than the 10 cars she insures, right? She's not asking questions like, hey, what's changed in your life this year? Can we do an insurance strategy session? Like, you think about right now, like, I don't know when this podcast is going to air. You guys want to, like, you know, 10x your business this year? Look, we're going into October. We're going into Q4. Why aren't you sending a quick text? Hey, I'd like to have an insurance strategy meeting with you. I want to make sure that you're fully covered. Your family's protected. Your assets are protected. How can I do this for you? Right? That's not a sales pitch. It's not like, hey, do you know anybody that's looking to buy or sell insurance or whatever bullshit that people use? Like, can we go into an insurance strategy session and make sure? So same strategy session that I use on real estate, which we walk through. We walk through assets. We walk through liquidity. We walk through kids. We walk through family. And then I said, this is what we need to do. You could do the same thing. Because one of those people, like, if you know what their liquidity is and they've got $500,000 in the bank, why can't you show them how to use a whole life infinity banking policy? It's way more protected in that policy than it is in the bank, right? So this is what we did. I mean, this is kind of what we're talking about, right? Our portfolio refinance. We pulled $1.8 million in cash out, but I took $1 million in cash that is going to be used for things, and I put it into whole life policies.
Every insurance professional right now is like, holy shit, this is amazing. And your wholesale agent didn't even freaking reach out. So you probably reach out to somebody that you're. Oh man, this is wild. Ooh.
Here's the crazy thing. So again, which we're going to talk about it, like we're going to go all over the place when I'm there speaking, because you know my theory, right? Dripping faucet fills a bucket. So if somebody has equity in their home and they can pull equity out and they can go put in a whole life policy that's growing tax free, and by the way, you get the write off on the interest on the property. That's what we were looking at. Is like, look, $100,000 is great to have in the bank as savings and reserves, but it's not doing anything for you. It's not gaining anything, and it's there not to be touched. It's even harder to touch that reserve in a whole life policy, but at least it's getting a return on money. And if I really need it, you remember like the Dave Ramsey thing, $1,000 reserve, like go drywall it somewhere like you can't get to it. That's kind of like a whole life policy. We'll put $1 million in it and it's sitting there. I know I can pull it out when I need it, but I can't access it through my ATM.
Oh man, this is so good, man. So Steve, let's wrap this up. We could keep this conversation going all day long.
Oh God, we're gonna have to do.
What's the best way if somebody wanted to follow you, get in contact with you, maybe invest with you? What's the best way for them to get in contact with you?
So Instagram is where all my content, including me slapping my 19-year-old with a piece of raw meat yesterday. We did the tortilla challenge with carne asada this weekend. It was awesome. So Instagram is where I produce some good content, some humor, some different things, at Steve D Valentine. And then my website is Steve D Valentine as well. And here's the other thing too, is that you all are, you're working with real estate agents, right? So this is a value add for you to call your real estate agent and go, hey, I heard this podcast. This dude is a baller on the investment space and residential. You should really listen to him. Right? Like go add some value in that standpoint, right? And I do these free discovery calls. So whether you're a consumer like Mike and Courtney we'll do a strategy session, right? Like where are you at? Same thing what you would do with insurance, I will do with you in life, right? Because my goal is to help people build long-term wealth and generational wealth, right? That's the whole goal. And you all have clients that are trying to figure it out as well. And we want to add that value to them, right? Nobody wants to be broke when they're retired. And by the way, there's some weird shit coming out about like stopping Social Security and some other things. So we're all going to be on the hook for any of that anyway. So Steve D Valentine on my website, we can do a strategy call. And if you've got clients that are questioning, like, should I be investing in real estate? What does it look like? Look at my Instagram. Like that is where everything is. And by the way, my dad did real estate for 40 years and didn't own anything. And my goal is to show entrepreneurs and insurance professionals, just anybody that's in the professional space, at how we grow our wealth through real estate. And real estate is a long-term hold, and there's so many different ways to do it. And unfortunately, most of your audience, they're like, yeah, I've got a real estate agent. Great. But 95% of the real estate agents don't own real estate. Therefore, they're really hard to guide through if you don't know anything about it.
That's right. Man, brother, I love this. We could take this so many ways, but I think how I want to end is...
I know.
First of all, thank you for your time, Steve. I know you're extremely busy, so I appreciate you coming on the podcast today. And obviously, you listening to this right now, as you know, time is the most valuable and important asset that we all have. We appreciate you spending it with us. But how I really want to end this is... something I just thought of. Make your money work for you, and don't chase the quick dollar, because the quick dollar typically, and we've all done it. Anyone, we've invested in some things that may be somewhat questionable, and sometimes they'll come back and bite you in the ass. But I think the tried and true things are the long term. It's the market, whole life insurance, real estate, like things you own, things that can make you money, pay you while you're sleeping. I think that's beautiful. So, Steve, thanks again, brother, guys. And guys, everything will be in the show notes. So if you want to get a hold of Steve, obviously check that out as well. Steve, my man, thank you.
I appreciate it, but I want to leave on this point though, if you don't mind. Really important, if you are doing the insurance and the stuff, and if you step away from the sale and the money, and you're truly guiding people to where they want to be, which means you have to ask those questions, where they want to be, what's going on. It will change everything in your business, because the minute I stopped selling real estate and I started strategizing for people, it changes the conversation. It changes the mood of the conversation. It changes the tone. So you're not selling anything, but you're strategizing to really guide people and protect them at the end of the day. So I just had to get that in. It was just one of those things, like, I love what you guys do, and it's so freaking important coupled with what I'm doing. But that's how I would approach that in this Q4.
And I love that, because I literally was just going to say, stop selling and just start having conversations.
Stop selling.
That's right, brother. Start that, man. I dig that. All right, man. So, Steve, appreciate you, brother.
Right. I appreciate you too, buddy.